not even quite sure. We went down to like 82 or even 80, which was really, really quite interesting. But again, really, really low liquidity. And I think it's just market jitters. Generally speaking, though, from an economic sort of standpoint, QT ended this week, which is positive. And there's going to be some form of QE kicking in at some point because it has to be, simply because liquidity, the sort of repo rates aren't looking particularly great. So the financial plumbing system does need some support without any sort of doubt. And then rates are going to be coming down. I would still think that we'll see another rate cut in January as well, by the looks of it. And that is going to hopefully help moving the market in convictions. It's really been interesting specifically. Obviously, there's been a rotation out of tech into healthcare, into financials, which again, with that sort of rate cut, it is somewhat a logical thing. But I still think that we're definitely in a bull market. Equity correlations are still quite low, which is a good sign. That typically happens if sectors move in different directions because there's different sort of plays in a particular bull cycle. So that's good. And but still, we just need to be patient and we need to see a distinct breakout. And then we'll see in the short term, not sure. But I still think that we should see like a good Q1.
Nice. I'm sensing the same. Soterios?
Early sentiment. Just to play more the contrarian card, I feel it's looking pretty bearish overall for Bitcoin. I sort of briefly flipped bullish again around the $100 mark, and then it proceeded to puke down to about 80, which is not unheard of in a bull run to have these sort of like 30-40% drawdowns. But yeah, I don't know, this part of the cycle, I wouldn't want to see such an aggressive kind of sell-off. So it's nice to see a bit of a bounce now from the lows. So I really think it's going to sort of dictate if we can reclaim the sort of 100K sort of level. I wouldn't be surprised if we go back up to even like 110, 115. Everyone's like full on bull modes back on, and then it continues to roll over once more. But yeah, it's hard to say though. I have not been feeling as like pessimistic about this latest drop, somewhat interestingly. So I think probably the like 3 or 4 calls prior to this, I've been like pretty bearish, and then that like visceral hatred of crypto has definitely lessened a bit now. So I'm not sure what that means. It's like I've either capitulated myself, or maybe some subconscious part of me is saying the tides are starting to turn again. But as far as like a sort of reset across the board, this seems like a pretty good reset. So if you were to sort of have a nibble or get back in at any levels, I think what we've just seen is probably going to have been a good place to buy, at least for like a local bounce. Am I still confident we're going to see sort of face melting rallies, altcoin season? I'm really not sure. I wouldn't be surprised if something slightly unexpected happens, where I feel a lot of the narrative, at least over summer, was like, oh, Q4 is seasonally super bullish. Fed's going to continue cutting rates. There's going to be like QT stopping all of this. We're going to see a big pump. And obviously, whatever the consensus is, it doesn't normally play out. So I think we've seen quite a brutal Q4 to date. And so maybe the 4-year cycle breaks. Maybe we see a sort of more steady grind up over 26, maybe even to like into 27 or something. And we don't see these sort of face ripping rallies, but we just see this kind of continual grind back up. And if you look at a lot of altcoins, they've been pretty much hammered all of this year. So I feel they've kind of gone through their own bear market of the year at this point. And so even if they don't reclaim all-time highs, there's still some fairly healthy upside. So even things like Link, for example, is still at $14. Last year it topped at around 30, so that's already a 2x from these levels. All-time high around like $53, so you could see it kind of creeping back up that way. Some of the newer coins as well. So I know we talked about XPL on the last call. That's just been down only, and so I think there's maybe going to be a bit of a rotation into these sort of like newer projects that are riding some of the bigger narratives. So XLP is riding the sort of stablecoin narrative. Things like Asta is maybe going to ride the sort of PerpDex hyperliquid narrative. Hype just had its DAT approved that is, I think, slated to like $1 million of Hype buys in the coming weeks. And so, yeah, there's still quite a few sort of positive catalysts coming up, and especially in the altcoin space, you can get some pretty healthy returns, even if it's not a sort of 100x from this point.
Don't you think people are traumatized about the alts at this point? Because the thing that's been interesting is I feel like in this cycle, everybody was waiting for an altcoin season. And then there was a moment where Bitcoin was like, performing well, but then the Bitcoin dominance kind of went down, as in altcoins were actually kind of outperforming, like playing catch up, but definitely not outperforming on a long-term basis. And everybody got their hopes up. And then liquidation just came and slapped them in the face, in a very clear way. And I feel like now nobody's willing to stick their neck out and say, "Oh, altcoin season are coming." But it sounds like maybe you're actually thinking that probably, it now needs to come.
Which is maybe a good thing. Like, I think once everyone's like capitulated the idea of an altcoin season, that's maybe when it will finally arrive.
Which is like Bitcoin dominance as well.
It's what? Sorry, Thomas.
No, I was just going to say. So this reminds me of I believe it was 2021. It was very similar. Where everybody's like, like people are selling their coins. So like, that's not going to happen again. Like, let's just get rid of altcoins and just swap back into Bitcoin. And that's when they pumped. And I feel we could almost be in that kind of, so I second that absolutely. And that sort of sentiment I share as well. You're like, oh, that's probably not a good thing. But generally speaking, so that's the sort of, and again, this could be one of those things where you're trying to be contrarian to what you're thinking, which means you're actually no longer contrarian, which is, I think, what the biggest problem that anybody in this space has. But I would still think that, absolutely second that.
Also, my gut is saying I feel meme coins are maybe brewing for like a bit of relative outperformance. It was kind of interesting to see the sort of relative strength of a couple of coins, especially on this sort of like relief rally, relief bounce, or whatever you want to call it. Things like Fartcoin, for example, just did 100x, 100% off the bottom. 100x would have been nice. Did 100% off the bottom, with like relatively little movement from like Bitcoin and other things like that. I think Bitcoin had bounced to like from 80 to 84 at that point, and Fartcoin had already doubled. And obviously these meme coins now have much smaller market cap, so they need a lot less liquidity. But I thought it was just interesting to kind of see the sort of risk appetite on meme coins that have felt pretty dead, at least the last 6 months or so. And just to show some things I'm seeing, I'm probably going to buy some FWOG so FWOG, which was one of the sort of darling meme coins of 2024. And the reason I'm saying that is because they've recently done a sort of NFT drop and some like game prize box that's getting some attention. And the creator of the Frog IP is now the creative director of Yuga. And so I think he's probably going to find ways to sort of integrate more and more of the Frog IP into what Yuga are doing, and they've not really said much this whole cycle. So given that it was at like 700 mil market cap and it's now bottomed at like 6 mil and it's now bounced up to about 15, I think that might be just worth a little punt at some point. So yeah, I'm gonna sort of have a nibble again at some meme coins, I think.
Justin, how do you feel about everything at the moment? What's your view? What are you seeing?
I mean, I hate to fall into expected roles, in this discussion. I'm just still so bullish, basically. And I know it makes me sound like a fool because like I was talking to a few people when we were still around the 100K and I'm like, I'm still so bullish. And then prices drop, 20, 25%. And of course, they kind of look at you as like, oh, the poor guy, must have gotten wrecked. I mean, the truth is for me, my portfolio is still spot only, with a break-even point that's much lower. So I'm like, I don't feel like this is a disaster. And I still have that long thesis of quantitative tightening is kind of over. A Fed chair will eventually replace Jay Powell. Ultimately, they'll try to use rates to kind of boost markets, boost enthusiasm, whether it's the right thing or the wrong thing to do for political aims or not political aims or whatever it is. You still have the ETFs, you still have more credibility and legitimacy in the asset. And so I just cannot wrap my head around I should be selling Bitcoin now, looking for downside. Because even if there is downside to be had, I'm still more of a long-term upside optimist, basically. And I know that sounds like such a biased way to look at markets, and we should be very realistic and not optimistic. But I'm like, I would rather maintain whatever I can for the upside, whether that comes now or in much longer. The other thing that I would almost venture out and say is, I know the most dangerous words, in trading and investments are like, this time is different, but it really does feel like this time it is a bit different, just in terms of like who the players are, what the infrastructure is, and so on. And so I do feel like maybe the cyclical bull and bear market that we've come to expect, I don't think it will materialize. And I think that might be the surprise of this fourth cycle, is that essentially it doesn't follow either the timeline or the shape that we've come to expect of like, the retail euphoria into either NFTs or previously DeFi. And it's kind of like, what is there to be euphoric about? RWAs and stablecoin? Okay, probably not. Decent yields? Okay, probably not euphoric either. And so because you don't have the euphoria, you also can't have the insane drop of a China ban or a war or a global pandemic. And so everybody's kind of either waiting for the euphoria, I am, and I'm not getting it. And then the bears are waiting for their absolute bloodbath and kind of not getting it. And I think that's why it's different. It's just like nobody's getting the volatility that we're accustomed to and the cyclicality that we expect from the asset class. I'll be happy to be proven wrong, or maybe not so happy, but I'm okay with being proven wrong. But that's my thesis right now.
I think as well, the idea of having this sort of like retail mania blow off top, like we've seen in prior cycles, is maybe not going to be applicable, at least with this cycle, just because, like you said, the institutional adoption, I think, does sort of change things. And then also, I think for the retail side of things, right now, if you look at what's happening in the equity markets, especially in tech stocks, anyone buying anything AI adjacent or AI first in equities has just been printing hand over fist. And so for your average retail user who's just printed a 5 to 10x off Nvidia the last couple of years, or are seeing 50% returns on Google the last like 3 months, it's going to be hard for them to sort of suddenly ape into crypto, being like, oh, this is kind of where it's going to suddenly outperform, because I feel the overarching narrative right now, at least, is AI, and to sort of fight against that, I think is somewhat foolish. But again, you don't have to be just like all in one way or the other. So I know previous cycles I've had a very, very like heavy crypto allocation predominantly, and you guys have been a bit more balanced. At least for this cycle, I've definitely had sort of more equities exposure, and now the last sort of 6 months, I've really increased my equities exposure in a much more substantial way. And so I think if you can be kind of seeing some upside from equities, that does also like cushion the blow a bit on the relative underperformance of crypto. And then maybe if equities start to cool off a little bit, then maybe attention will roll back into crypto, kind of like it did last year. When Nvidia started to cool off a bit, we kind of had that sort of rotation back into crypto, and then obviously with all the lead up to Trump and all of that. And one final point as well with that, I do think the crypto markets, it felt like more of a left translated cycle to me, where I feel the true like peak in euphoria was around sort of December 24, so almost a year ago now. This year has just felt very sort of very painful. I've not felt euphoric at almost any point of the last year, whereas all of 24, I was like, holy fuck, everything's going great, up only. And so I think maybe a lot of that positive sentiment got front run, and normally bear markets last about a year. And so maybe we've seen that sort of like muted sentiment this year, and it's kind of reset for the next year or two. That will be a kind of climb back up.
Do we want to look at some charts and potentially start with, whilst you're talking about a sentiment, the coin market cap sort of fear and greed index, just to sort of see, because one thing is obviously how we feel about it, but then there is some things that sort of help to measure it. But I think, so cheers once again, I'll second this. It doesn't feel like we've seen that, again, since December 24, we've seen that sort of, euphoria at all. One thing I disagree with is the notion that so nothing will change your sentiment than price, right? And that's, I think, so the minute we're back at an all-time high and sort of break out from that substantially, just like it sort of, we went to about 110, went back to, I believe, almost again the high 70s, and then once we had that distinct breakout above 110, then we've sort of seen a lot more of a. Let me actually see if I can.
Yeah, sorry, Justin, can you enable screen sharing, because I can't see it right now?
Okay. Is it not enabled? It should be the same as every other session. I haven't changed any of the settings. Or is it because I have to make you go? Okay,
can you guys see my screen now?
Yeah.
Yeah, I can see your screen. Yeah.
So I can. Worst case, I don't mind sort of doing that. I'm hoping that this is probably not the best way of doing it, because my screen is a little bit big. But I think to sort of highlight the point that Satir's just made, we've obviously seen let me just go back here. So we've obviously seen, so this was the beginning of March, right? There was, or end of February, it started with sort of markets being a bit jittery with the trade war, not really knowing what's coming, and then that then sort of hit the absolute bottom, sentiment bottom, and the what was that, the 9th of April. But ultimately, we're also seeing a lot of we've seen a bit of a breakup since in May, and that's when also Ethereum did that massive catch-up trade after it went down to like 1,500, 1,400 levels, which was unheard of in any sort of bull market. But it didn't break over. We were just talking about that sort of November, the sort of Trump trade, December sentiment. We didn't quite see that extreme greed that we saw also equally in 2024 after the announcement of the ETFs. So I think
the extreme greed though during that cycle, I think with the altcoins that were pumping, like meme coins were just like going insane. All the AI meme coins were also just going insane. And so I feel, to me at least, that felt like the true sort of like retail euphoric moment. Even though Bitcoin was like only knocking at the door of 100K. But I say like the retail euphoria, but realistically everyone trading meme coins was mostly sort of already crypto participants. I'm not sure how many like new people came in to trade meme coins. But yeah, that was just my vibe on that period.
Yeah. No, agreed. And obviously meme coins are on a very, very on the other end of the spectrum. I think on that front, there is, and I think in terms of sort of these, so there's been a lot of interesting, I suppose, from a branding standpoint, not so much from a utility or tech standpoint, but there's a lot of coins that were trying to break into AI. I believe there was a lot of sort of credit sharing at some point that kind of took off for a little while. But yeah, I think it's very sort of micro narrative driven at the moment. There was obviously hype, which is still, I think, the sort of so in terms of decentralization is probably more than just a micro trend, but that's something more substantial. But it almost feels like there are breakouts. We've seen Zcash obviously with privacy, and I think it feels like these breakouts are more. It almost feels like single stock breakouts as opposed to sector movements in traditional markets. Which is, I think, what we're looking at in terms of like meme coins, altcoin cycles. That sort of, I think that might be a good analogy. But yeah, it doesn't feel like we've seen that. And again, circling back to what we did discuss beforehand, this almost feels like, especially with this base effect now, right? With a lot of these coins being at like absolute lows, I think, yeah, it could be a really, really good trade to sort of start trickling into those. Again, I think May would have been an interesting one. If you look at a couple of meme coins in May this year, you will see that because they were just completely and utterly destroyed, and then any sort of movement did like an easy 5x, which is a very low return for meme coin, right? But whereas moderate is more like 20 to 50x.
No, completely. But again, just like zooming out as well, if you look at that sort of fear and greed, obviously hitting extreme fear is never sort of a one-shot indicator that the bottom's in. But as far as like resetting sentiment, I feel, as you can kind of see here, it's been a pretty miserable sort of 9 months, pretty much, of like down-only sentiment, pretty much since the inauguration of Trump. And so I feel if there's a point to take a stab at kind of getting back in around these levels, feels like not a bad position. Obviously, it could chop for another year at the lows, but yeah, I don't know. My gut is feeling a little bit more bullish.
I think that's also the irony of trading, is that people always want to get in at a point where they will suffer no downside, and that's just not possible, right? Unless you can perfectly time the market. And so kind of echoing exactly what you're saying, which is you see prices in the lower 80Ks, and you would almost go to like one of those investors who 3 weeks prior to that, would have given anything to get in at 90K because Bitcoin was above 110K. It's like you got to have some I don't know, consistency in your thinking process, right? Which is you're essentially getting at a price that you would have killed for, which was a price where Bitcoin was sitting maybe 6 months ago, right? Before or 9 months ago, before we even crossed, the 100K mark. And now that you're looking at it, of course, the reason why it's down there is because terrible things are happening. But those are the times where you do want to be allocating, right? Like going back to this, buy when there's blood in the street, even if it's your own, right? So, I mean, I know I'm repeating exactly what you said, Sotiris, but that's precisely it.
It's great. I just love the when terrible things are happening comment. And I think that's the only sort of slight distinction there where if Bitcoin's at 100K and it's in a sort of continued uptrend, like, yeah, you'd give anything to buy it at 80, but then if it rolls over and breaks market structure to the downside and it starts to put in a sort of trend of lower lows and lower lows, then maybe the sort of 80K starts to look not as good anymore because the conditions have changed. And so I can understand the point you're making, but also on the flip side, I think having just the thought of like, oh, I liked it at this price once means I'm going to like it at this price forever is maybe not 100% valid. And I think I've just got PTSD from it being my third cycle now, but I know when the bear market hits and it rolls over, it just continues going down so much further and for so much longer than you think is at all reasonable. And I also just don't want to be a bag holder like for another whole cycle. And so I think for me at least, I am still playing this more defensively, and right now my exposure to crypto is like 25%. I may increase that slightly, but I feel at this point of the cycle, I'm quite happy with a relatively smaller amount of exposure. And if we see a blow off top, maybe that 25% doubles, triples or whatever, and it's still like a pretty healthy overall return on the portfolio. But it's not going to sort of triple or quadruple my net worth from this point.
So Darius, I just want to address what you said, kind of give context to my rant, about like getting in at essentially lower prices. And there's two things. First, I'm not saying you should necessarily invest at those levels, but my point is if you do have a bullish thesis, like a long-term bullish thesis on Bitcoin, then it is the right, this is a better price to get in than whenever you were hesitating at 90K, 100K, 110K, 120K, right? So again, I'm not saying if someone has a strong, thesis for why it should go down, I commend them and encourage them, to short or sell. But the point is for those that do have this long bias already, not saying that this level is a bullish base, right, or a support, but I'm just saying if you are bullish, then this is a moment where you need to be able to pull the trigger. And then the second thing I would say, and I think that's a distinction with maybe new investors versus you as a crypto trader, is I think you're a very wholehearted, to put it that way, type of guy, which is I'm either in crypto or I'm really not in crypto, right? You're not as diversified as maybe Thomas or I or a traditional portfolio manager would be. And that's where the concept of position sizing kind of comes into play, right? Which is you might have a broad portfolio of cash, of equity, of bonds, of physical real estate, of precious metals. And then you have a sliver that you've kind of kept along for cryptocurrencies. And I'm like, again, there's a point where you need to be able to pull the trigger. And I'm by no means saying that 80K was that support zone and that it can't drop massively back to 70K or 55K or the upper 40Ks, who knows. But my point is you need to start averaging in to a certain extent. And if you're not averaging at 85K or 90K, you're never averaging in. And then that's fine. Look at something else, right? So that's it.
I could agree more. And I think my comments are based on if you're looking at sort of more like short-term moves or you're more of a momentum trader. But just to reiterate the point you were making, if you have a long-term thesis on like, I think Bitcoin is going to go up over the next 5, 10, or even like a couple of years or whatever, like you said, any kind of drops in price, you should just be buying all the way down, even if you start buying at 80 and it goes all the way down to 40, and your thesis remains bullish, then if anything, it's a gift. And so I do think as well, sort of position sizing is super important, where I have been very binary with a lot of my positions. So pretty much as long as you guys know me, I'm like, yeah, I'm like 100% allocated to crypto. Let's go. But ultimately, that's like not a sensible approach. And so anyone who say had like a 5 or even 10% allocation to crypto, if you're buying at these levels and it drops down another 50%, it's not the end of the world. You go from like percent allocation to a 2.5% allocation for a year, and then it might 5x from that point. And so I think for a more sort of balanced portfolio allocation, even just buying at any kind of dip like we're seeing now, I think long term is going to be a no-brainer. And especially with something like Bitcoin. Obviously, if you're buying some like esoteric L2 that's just launched, like no one knows if it's got staying power or not, but the sort of tried and tested coins at this point, I think, are a justifiable sort of longer term hodl.
Also, I do want to talk about the ETF flows and what Thomas is sharing, but I'll just also highlight like 3 news that came interestingly kind of over the weekend and the beginning of the week, which is the MicroStrategy cash reserve. Then you had Vanguard enabling crypto trading for its users. And again, if you want to be a little bit, not conspiracy theorist type of thing, but it's like when those big asset managers make a decision, they probably want to look good, make their investors look good or make money. And so they don't want to enable trading right as, you know, prices are going to the absolute bottom. Not saying it can't happen, but now we're opening a new tap of new capital, different type of investor, a whole BD team that's going to be pushing it. And then you also saw Calci integrating Solana. So now you've got the Poly market that is this super useful, if you look at it from just a user and transaction count, is a super useful platform. And then Calci as like a massive competitor. They're both kind of looking at blockchain for event finality or transaction finality. And then you've got those asset managers and you've got the ETF, sure, outflows that maybe that are getting steadier or decreasing. And then you've got the quote unquote end of QT, as in, I don't think it's going to get worse. It probably is only going to get better. And I'm like, I don't know. I feel like when everybody's capitulating, just like we were talking about with the altcoin season, I wouldn't be surprised if in the lull of the Christmas period and the Chinese New Year, you get some nuclear moves, basically. So we'll see.
Mm-hmm. Yeah. No, I think that makes sense. And from a sort of more technical standpoint as well, Fusaka is obviously live now. So I think that's probably going to give the, you know, biggest stable coin in all of crypto, being Ethereum, a really, really good degree of tapping into scalability, and it's sort of allowing if any sort of layer to be running a lot more efficiently. So I think from that perspective, that might also, and that's one of my pointers as well. I feel like Ethereum is still, and I've been probably saying that for the longest time, but it's probably due for a bit of a run up, because I think it's becoming, and yes, there's, you know, Solana this, Solana that, and, you know, Solana and Calci, but ultimately the world computers is, you know, still Ethereum at this time. And I think it's just solidifying its standpoints with all of these, you know, upgrades coming through. And that's, I don't know, it feels like there's a lot of work done on the back end. And obviously, you know, tech is never good, especially in blockchain, it's never a good indicator of sort of returns, unfortunately. But that's obviously the same in tech. So it doesn't really, it's not like this concept is new. But yeah, it does feel that there's a lot happening in the back end, and yeah, nothing I think stops this trend.
Yeah, and especially DeFi for Ethereum, I feel we've not really seen any meaningful challenger yet. Where if you look at where, I guess, the bulk of the stable coins are, the bulk of the sort of biggest DeFi protocols are, most of them are sort of Ethereum first, and especially as like we get more institutional adoption, I think it's going to be a much easier sell to be like, well, do you want to use the sort of true and tested platform that is ETH, or do you kind of want to try and risk it on a sort of less decentralized, less robust L1 or L2?
And I remember, I'll just interject here, but I remember we talked about it on previous calls, but you remember when I was at Liquify, and so I was kind of handling all the launches. I remember that like EVM compatible was like the way, basically, like everybody was going EVM compatible, unless they're their own like kind of L1, obviously, right? But nobody's building on the other chains, basically. So it was either, oh, we're trying to be a competitor, or we're building on a chain, and then by default, it's EVM compatible, as in 80% of the case Ethereum, in some cases building on BNB, BSC. That's kind of it, right? So you had also some maybe layer 3 that were building on Arbitrum and so on, but it was always EVM ecosystem, right? So yeah.
And I think one other sort of more niche piece of news as well on that front is it's essentially that Ethereum is going to enable passkeys, which I think is something that, you know, people might dismiss easily. It's like, why does it matter? But I think ultimately it allows users to, in a much easier fashion, integrate and secure their holdings, right? Because it's obviously a sort of device is a much better and a hardware-based identifier of ownership, and it makes the whole passphrase management a lot easier, right? If you've got a fallback, and I think especially sort of smartphones have been, from a security standpoint, really solid, and that's something that I'm personally quite excited about. And it almost seems like there's still this parallel universe where the future sort of blockchain is decentralized, and if that, I mean, I think irrespective of how it will pan out, and there's definitely going to be a degree of centralization, but I feel that there is definitely a chance that that's going to help with adoption as well, and there's going to be a lot of alternative yield opportunities there, because there's always going to be need for liquidity, and somebody in DeFi is going to be, you know, is going to be willing to pay for flow or to pay for TVL. So that might enable a lot of people sort of, you know, participate, and that's a good thing.
100%.
I feel I don't own enough Ethereum, actually.
I haven't heard anybody say that in at least 12 months, but I'm happy you feel that way.
Yeah.
Tom, do you want to talk a bit about the screen share and, you know, maybe the ETF story?
Yeah. So just also pointing that out, and obviously it's not, you know, it's not looking great, and we went from 126, I believe, to sort of the low 80s, and just to sort of take a couple of steps back, right? So obviously ETF flows are quite important, and they are important to some degree, but what we also need to be cognizant of is that there is a lot of sort of option-based trades, right? So there's a lot of delta hedging happening, and what I will say is, at the moment at least, we've got a solid degree of support through these institutional buyers, and one can argue that there's a lot of sort of volatility hedging, which ultimately also I think is one of the reasons why Bitcoin doesn't do this what it used to do in the past, which is just this like run that is crazy, followed by a 30-40% drop in a bull market. But we've obviously not had a lot of sort of support on a flow basis, right? We're being through retail, being through sort of institutions, and that's definitely something that isn't positive at the moment. But we've also seen that in March. We've also seen that throughout April. If we sort of carve out the sort of bottom, and it looks like that is almost an extreme flow. We've obviously seen we're looking at a lot of bars there of outflows, and it looks like that could be reversing quite easy. And I'm very excited to also actually be looking at Ethereum on that front, because that could even be a little bit more telling if I go back like all the way, obviously, and Yeah, so it looks like we've obviously had a great degree of capitulation here, similarly to what we've seen in here, but that we didn't have the flows yet. But long story short, I think this looks generally like a lot of bearishness, and I would not be surprised if we'd see that sort of, May through July a picture on Ethereum with a significant uptick, with people realizing that ultimately it's really good tech, and it's going to be used one way or another, and whether that is going to be direct exposure or whether it's going to be used for sort of finality and settlements, that is obviously something that isn't in the clear, and time will tell. But I still feel that there is definitely a use case. We're talking about these institutions, we're talking about vanguards, right? And then you're back in this very, very institutional capital allocation process, which isn't a matter of, weeks or months, but they go based on, they go based on years. If you're dealing with family offices, etc., in order for them to sort of make a decision, that's a multi-month, if not a multi-quarter process. And that is then followed by, potentially quarterly reallocation. So in order for that to sort of trickle down for the accessibility that we're seeing right now in crypto to be affecting prices, still going to take some time. But I would fully agree, all of these banks are looking to get exposure into crypto. They're hiring as well, which is something that can be tracked through some other indexes. And I think that's something that we're all dismissing at the moment, or the market is dismissing. Well, not dismissing, but I think it's just not priced in just yet. The only caveat on that front is the last bull market also ended on a very, very positive sentiment with, additional sort of blockbuster news coming in. And obviously we topped out like 65K, which would have been a great sort of price. As at today, it would not have been a great price. As at what would that have been? Probably like June, July 2024. But and I think from that perspective, time is probably a good means to allocate. And so from that perspective, Bitcoin and Ethereum are always going to be good sort of allocations in the long run, I believe.
I agree.
Do we want to look at some sort of, and I know we've got 12 minutes left. We can look at some charts. Do you want? So just can you share your screen?
Yeah.
If you could, because I've got dark mode. I'm one of those, and that's horrible to look at.
Can you stop your screen share and I'll try and share mine? Why is it not letting me? Okay, here we go. Okay, I'm not sure where you guys want to start, but so you just talked Bitcoin, ETH. I think maybe we can just have a kind of very quick look at the charts on that. So we saw the top here, this big sort of 35% drawdown to the sort of like 80K level. Interestingly, it sort of hit that pocket here, which does feel like quite a sort of natural resistance point. One thing that does scare me slightly is this is the first time we've seen this sort of like trend line broken. Obviously, trend lines are pretty arbitrary, and this is only based off like a couple of touch points, but just something I do sort of personally keep an eye on. Ethereum as well, I think just like zooming out, it's the coin that's never really sort of had a chance to shine in the last like 5 years now, where we sort of had that super aggressive sell-off. It was the first coin to really bottom after all like the FTX explosion. It was like sub 1,000. I think we were even chatting in our group chats like, oh, sub ETH is just like instant buy. And so I think all three of us were sort of loading up on ETH sub 1,000 back then. And then since then, it's just kind of been like desperately trying to sort of break past the previous levels, but it just hasn't quite managed it. But I don't know. I feel if something's like trying that hard that many times, eventually it's gonna break through. Not to say it won't sort of puke and have a good old retest first. I think Sol is maybe another one to kind of look at, where we had this sort of amazing run from like $8 all the way up to like 200 that felt almost nonstop. And then we've had a year and a half of sort of chop solidation. I remember seeing this sort of like rising wedge pattern, and it sort of played out textbook, like gives you that little fake out and then pukes. Sol, I think, is, given what we said about Bitcoin and Ethereum, in my mind, Sol has that sort of third spot where you look at the amount of adoption in the Sol ecosystem and the sort of quality of the dApps built on Solana, I think, is really high. And you have things like Pump Fund as well that is still generating like $1 million USD in revenue that they're pushing towards buybacks. It still shows there is a surprising amount of action on not only a platform that has like notoriously low fees to begin with, but also in like the depths of a meme coin bear market. And if we're still seeing like $1 million USD a day revenue being generated, I feel that's sort of quite telling to the product market fit, at least for Solana. So again, I think I'm just generally like pretty long-term bullish on. I'm not sure if you guys got any comments on Solana before we move on, but
yeah, no, I think you got it. Couldn't agree more.
Kind of clear some of the indicators. And then I know it's a little bit biased, but this is basically my current holdings. So Hype, XLP, ZEC, Aster, and Tau, a little bit of Mon. I think Hyperliquid, I'm still pretty bullish on personally. It's one of my few like longer term conviction holds of this cycle. I think we are seeing a lot more competition from perp dexes, but at least for now, Hyperliquid still seems like the sort of the de facto leader in the perp dex space. I think it's really interesting now with the HIP-3, which is essentially allowing users to like spin up their own tokens as long as they're providing enough collateral, which is now enabling people to create sort of synthetic equities. And so platforms like TradeXYZ are now launching perps on sort of tech stocks, which also enable leverage on tech stocks, which I think is also quite an interesting play, where the risk reward of, say, leveraging something like Google on 10x leverage is quite attractive, because, or even on 3x leverage, because with equities, Google's unlikely just to suddenly like wick down 20-30% in a day. And so you generally have like less volatility than crypto, where you could potentially use some like higher leverage with less of a risk of getting liquidated. And then also it's enabling 24/7 trading of US equities. And so like right now, not huge liquidity, but I think as a sort of new instrument for equity holders, I think it's pretty cool. And again, all paths lead to Hype in the Hyperliquid ecosystem. And so all of these launches and tokens have some portion of revenue ultimately being diverted back to Hyperliquid, who are using the revenue to buy back the Hype tokens. And so I think the more growth we see in the Hyper EVM ecosystem. Just more buying pressure for Hype. We also saw the team unlocks, and so I think that's been quite a big stress test. And unsurprisingly, the team didn't just like full stack hit of the chart and like market dump everything. I think they're shockingly a fairly smart team, and so I think the way they've navigated the team unlocks has been pretty nice. So they've restaked to Porsche, and some of the team members have done OTC deals, and other ones are using some of the lending platforms to kind of get collateral against it. And so at least for this unlock, they've not tried to massively dampen the price action. I know, Justin, you're now a Hype holder.
They're making a lot of money, right? So they don't. It's not like they need to. And I think that's probably, in terms of these sort of micro sectors, that's probably one of those things. I'd love to look at Pump as well, because that's, like you said, really good product market fit, right? So they generate revenue. So it's an actual company. So they're not relying on their magic internet money, but they're actually providing something that is a utility to market participants that they're willing to pay for. And that's also very, very quite interesting there. So I think even looking at Pump, it's at 30%.
30% off the bottom still. So this is all in log. So we're like 179 back up to the highs. And yeah, it seems like fairly good risk reward at this point. I'm actually going to move that up my own personal list. And just, I'm not sure if you got any comments on anything we're seeing here.
Sorry, no.
I know you're less of an active one. So this coin has just cost me an upsetting amount of money so far.
Tell us about the trade.
I'm just the trade is like watch a retard loses money. But I feel, I know I said this like constantly, but I feel this one's due a correction. And again, I know a lot of TA you got to take with a pinch of salt, but I think we're starting to see a fairly nice bullish divergence on the RSI. So
yeah,
you're going to see here sort of higher lows on the RSI, lower lows on the price action. I would be shocked if at some point this goddamn lawful token doesn't start to climb back up. So we might end up seeing this sort of nice like half pipe kind of shape. What I've said to myself so many times yet don't follow is like wait for the half pipe to start going back up before you start buying. Whereas I've just been buying all the way down like a fool. But now I have a weighty bag of XPL that I'm now huddling. So this one I'm hoping will recover at some point. And I feel out of all of the narratives this cycle, stable coins feel like one of the biggest and one of the most obvious narratives, and they're arguably some of the hardest to get exposure to. It's like, what are you going to do? Like buy Circle stock? Or buy like Sky from MakerDAO or something. And so there's not actually that many ways to get exposure to stable coins. And I feel Plasma, so XPL, are backed by Tether, at least in part, and they're building this sort of like a stable coin first L1 system. It kind of ticks the boxes narratively speaking, at least. And so feels interesting. ZEC, I feel, is another one that's really sort of like captured mindshare, so probably one to watch. I was a buyer at 380. it proceeded to drop down to like 300. So I'm still a little bit underwater, but I was kind of happy to get in at that point again. And personally, Asta, I feel quite bullish on. It's like CZ is only publicly stated he owns 3 tokens. One is Bitcoin, one is BNB, and now Asta. And so trying to keep it simple for my stupid self.
I'm wondering if we're not making a mistake of thinking that those big guys have our best interests at heart and will support the token. And I know we're not coming at it from like a rosy-eyed, oh, they want the best for us, but as in that they will protect their reputation by doing what's best, to kind of make the community look good, as in, hey, YZ Lab and so on is behind Asta, therefore it needs. And I'm not 100% sure that happens. Same thing with the Plasma, with Tether. And it might just be that it's like, hey, there's a Chinese wall between us and those projects, and if they fail, it's kind of on their own, and we're maybe getting rugged. But the reason I'm saying that is because I'm still manning my own investment thesis, as in I did buy some Aster as well, on the hope that Binance, Easy's machination will somehow pump it up. But that's it. Guys, I think we have come up on time already, and I know, Thomas, you've got stuff to do. I need to go as well. It was a bit of a shorter one compared to the 1 hour and a half or 1 hour and 45-minute one we did last time. I think next week we already have another one. I don't know if we'll keep that or if we'll move it by a week. But it feels like there's so much happening right now, so there's plenty to discuss.
Awesome. Thanks, guys.
Cool. Guys,
agreed. Thank you so much. Have a good one.
Bye, guys.
Bye-bye.